Today we will be discussing BlackBerry stock and why it will be going higher soon. Let's get into the video. Hi everyone, my name is Zach and welcome back to Finance Bro. I would encourage you guys to stay to the end in order to get my technical analysis on this stock as well as my fundamental analysis about financials and where this stock is going. If you guys are interested in getting 2 free stocks with WeBull, go ahead and click the first link in the description. All you have to do is deposit $5 and you can get up to $2,300 worth of free stocks. With all that out of the way, let's get straight into today's video about BlackBerry stock. So overall, red day in the market today, guys, but I really wanted to go over BlackBerry, which is actually up on the day. So we have this article from investorplace.com and it is called "Why the Worries About BlackBerry's Outlook Are Way Overdone." A lot of people do have some worries about BlackBerry's actual real value at this point, because obviously it was a huge target by Wall Street bets recently, but if you look at WSB tracker, I don't have it up right now, but they are not being talked about on Wall Street bets whatsoever, and that's probably because they had a bit of a decline recently. But yeah, here we go. Let's get into why BlackBerry's outlook worries about it are way overblown and overdone. BlackBerry's headline fiscal first quarter results did not look very impressive in the but the earnings were actually fairly solid according to this guy, Larry Rammer. More importantly, for the long-term outlook of BB stock, the company continues to make excellent progress on a few important fronts. Specifically, its QNX business continues to thrive. Its IV initiative still looks poised to be a big success, and I believe that the amount of money BlackBerry will receive in exchange for many of its patents could exceed Wall Street's average outlook. And that is the whole thing about BlackBerry stock at the moment. We are trying to buy this stock while things don't look so good. So right now, BlackBerry was up a lot in recent history, but obviously it's on the way down. Earnings didn't look good for this quarter, but when you're in the stock market, you have to be looking years ahead or even months ahead in order to try to predict where the stock could be going. And BlackBerry has a lot of good things on the horizon, and that's what makes it a good buy opportunity, even if people don't like that earnings didn't do too well last quarter. But on the IT security front, BlackBerry's new products, strong battle-tested technology, and large contingent of incoming sales professionals should boost the results of BB stock in its fiscal fourth quarter, according to this guy. Then this guy goes over that the Q earnings were actually fairly solid, even though revenue fell 15% from the previous year in the same quarter. There were several temporary issues likely that caused this decline, specifically in the company's IT security business, faced with a difficult comparison to Q1 2020, when the onset of the pandemic caused many businesses to look to provide security for their remote workers. So basically, the pandemic kind of derailed what BlackBerry had going on, but that should only be temporary according to this guy. And BlackBerry's bottom line was lowered by a seasonal issue. The company pays out its annual bonuses in Q1, so that's why earnings didn't look anything crazy for this last quarter. But in general and in the big picture, he believes that BlackBerry's business remains slightly profitable. In Q4, the company's net cash operating activities came in at $51 million, while the same number for fiscal year was $82 million. Its earnings per share, excluding certain items, was 18 cents, despite the negative impact of the pandemic. So overall, earnings were not the total bust that some people say they were, but obviously they could have been better. But there was a whole pandemic, and you can't base future success off of something as drastic as when the pandemic happened. Then this guy goes on to talk about how their QNX business is thriving, and IV is progressing well, even despite the chip shortage that we have been seeing. The backlog of QNX's royalty revenue rose 9% from the previous year, so everything is going well on those fronts. There was just a lot of bad things that were happening last year because of the whole pandemic, so obviously Q1 might not be as good, but that does does not mean that the next year it won't be better. As for Ivy, the auto app store that BlackBerry is developing with Amazon and other partners, Chen noted that his company is continuing to work closely with Amazon and said he continues to expect an early version of the product to be released in October 2021. He added that versions of Ivy should start to be distributed in February 2022. So basically everything is looking up for BlackBerry stock, and this is really going to be a long-term play that you're going to want to be a part of rather than a short-term play, as obviously we're seeing some pain in BlackBerry. But when you see pain in the market, that is actually most of the time the best time to strike. The author then goes on to talk about how they have had positive changes in the IT security business that they run and the patent deal that they have as well. So although the IT security unit did face a difficult comparison, I'm a bit concerned about his 10% drop from the unit's top line. However, due to the division's strong products along with positive steps Chen is taking, I remain confident in the unit's longer term outlook. So obviously this wasn't a good comparison to last year, but like we've been saying throughout the whole video, I don't want to sound like a broken record, but it's a hard comparison to make with all of the everything that was going on in the market. But yeah, this is a quote from Chen, I believe. We do not have the most mature AI engine in the space and the ability to block ransom. Or we do have the most mature AI engine and the ability to block ransomware years ahead of time without need for net connectivity. So basically saying we're the best everything. In Q1, BlackBerry launched BlackBerry Gateway, a zero trust network access product that uses AI to continuously authenticate network activity. Basically, they are that guy in the AI and security base or in space. And here's a positive catalyst that BlackBerry actually does have coming up. He says that he believes Facebook is ready to buy many of BlackBerry's patents, that because the social media giant looks poised to lose a court battle with BlackBerry. So this would be a huge catalyst for BlackBerry. If this were to go through, I would expect a huge jump in the stock's price. RBC Capital recently suggested that BlackBerry could attain around $1 billion from the deal, but he thinks that this could totally easily reach $2 to $3 billion as well. So basically, if this does go through, this will automatically take BlackBerry to a whole new level with investors. But that's going to be it for that article. Let's quickly get into the income statement and balance sheet to see how good BlackBerry is looking. Obviously, annually we are down from 2020 from $1 billion all the way to $893 billion. If we take a look at quarterly, quarterly doesn't look too hot either. They are also down in that. But if we take a look here at their balance sheet, things do look a bit better, with the total assets, current assets being $953 million, current liabilities being $402 million, and then total debt being about $830. $1 million is actually not that great. But they do have time to get more revenue and everything of that nature, and I'm sure they don't have to pay off this debt right away, but I don't like to see a lot of debt, I'm going to be honest. So the balance sheet, it's looking okay. It could definitely look better though, in my opinion. Okay, so now let's get into the technical analysis, and honestly, the charts don't look too hot for BlackBerry stocks. Obviously, they topped out at about $20 and went right back down to about the $13 to $14 level before trading a bit sideways, and then ever since then we have been consolidating. There is little volume compared to early June when they were going crazy. But obviously we've been making lower highs and lower lows for a while now. This is a pretty good stock to swing trade actually when it's down a lot. But let's try to see where their next support line is. And honestly, if I'm looking at a stronger support line, I'm kind of looking at $10 as a very strong support line. So from $11.53, I would really say that we have a pretty strong support line at $10. So we are probably looking at about a 11% downside from here, but a pretty good upside all the way up to about $16 to $17 if we can get that catalyst of those patents going through, and then also with the increased revenue with everything they have going on soon. But as for, as the interim in the day, we are actually looking pretty solid. I believe we're about to start trending back up on this MACD. We're about to close, by the way, the market, and we're honestly looking pretty good, holding this $11 support throughout the day, except for when we started below at $10.90 yesterday or today. But we rebounded pretty well. The RSI is only at 45, so it's not like we're overbought or anything. There's still a lot more to go. As for a swing trade, it's actually looking pretty good, coming down from 12. Now sitting at about 11.50, but honestly, in the macro of everything, $10 is a great support. In the interim, about $11 is a good support for the next couple of days. For the next couple of months, $10 is a great support. I don't think it dips below that. But yeah, that is pretty much going to be it for today. Thank you guys for watching the video. If you did find any value out of it, go ahead and leave a like and comment and subscribe, and consider turning on post notifications, as it really helps out the channel. But my name is Zach. I'll see you in the next video.